Oh, hello everyone. We are live without any countdown till one. But it is what day it is. It is order flow day and NFP too. Both of them are going to get covered by Anastasia. So I'm here to learn new presentation of order flow and about NFP, how we can trade during NFP. So stick with us and make sure to give us a subscribe. We are very close to 2,000 subscribers on our channel. How are you, Anastasia?
I'm doing good, doing amazing. How are you?
Absolutely fire.
How are you, Tradeify? You are so official today for the NFP. It's like an NFP outfit.
Yeah. And we have 2 days order flow as well, so I thought to wear it.
Nice. Well, we're gonna move order flow for the second half of our live stream because I did completely forget that we do have the bank holiday tomorrow. So thanks to Jonathan, at least he kind of reminded me this because I was that close to open the position, which I do not trade before the NFP normally. I don't trade already on Thursday before the NFP, but today, like, NFP is on Thursday. Right? Yeah. If you again wondering why NFP is on Thursday this month, is because we have the bank holiday. So sometimes the NFP is moved because it's a bank holiday, and also it's moved majority of the times is the first day of the month falls on the first Friday of the month. Then they also move it for the next Friday. So tomorrow is bank holiday, market is going to be closed, NFP is going to be today. I'm not sure if I'm going to trade this week at all, depending how the NFP goes, I guess. We'll see, maybe we can find something interesting during the NFP. But did you trade today, Tradeify?
No, actually, I'm just staying away from this range. I did yesterday, but not today. I'm not really enjoying the range.
Yeah.
Yeah, guys. Oh, hello, Trader and Q. Welcome to the stream. Glenn, Initial Maverick, Yumi, Bonapips. Hey, Bonapips, you are the first one writing active. Yesterday you won an account, but we gave it to someone else, unfortunately. That's what we do if you don't write anything. Yeah, Anastasia.
Yumi is saying that you look like a CEO of Marvel.
Oh, no.
CEO of Marvel, I love that.
I wish I would be CEO. Anyway, let's get to the gold. So yeah, I mean, this range, Anastasia, after the really good expansion and then the retrace back in the zone, it's not really giving me enough sense, the spidey sense to give me some direction in some, to trade stuff. So I'm not even trading on the 1 minute chart today. It is just ranging. So I'm saving my account for today. I'll see what happens after the NFP. So yeah, mostly today I'm gonna trade NY session for today only.
Yeah. Well, I haven't traded at all today. I was super close to take a position today, but until Jonathan sent actually it's NFP Thursday. So thanks God I didn't, because I would get stuck in a range, which is the reason I don't trade before the NFP ever. So what do we have on gold in general? Well, if it comes to gold, we have non-farm in just 25 minutes from now, so we do have some time. If it comes to gold, I did have this plan already pre-prepared before, and we talked about it yesterday. Remember when you said, do you think that if it's going to continue higher after the retest of the highs?
Yeah.
So remember we talked about the price coming back to the median of this range? Yeah. So if you look at where the price went after the reaching the highs and breaking through the highs and all the stop hunts, it went exactly to the medium. So if we do place there, where is actually, 1 second. That's how often I use Fibonacci. Yeah, but if you look at where the price went, it went to like 50% exactly of this whole expansion yesterday and continued to the upside. So that was not a bad decision to buy it if anyone would be awake during that period of time. So it went exactly how we were talking about yesterday. And now looking at where the price is, we are above the previous volume zone. So the area that was interesting for me and the trade that I almost took before I realized it's non-farm one day earlier is a trade from 40.75 to 40.60. So we did have a couple of volumes here that stopped the price previously. So we did have the rejection. And then my plan was if the price goes higher, it continues back into 75.60 area and then reverses from here. So we did go a little bit lower, obviously, to the median of the range, but in a matter of fact, we did return above the volume. So as long as the price is above 40.75, I'm continuously expecting the price to go back to 4,100 or maybe even expand further to 41.30 and breaking outside of the range. But the closest target for me would be 4,100. It's like I would be so close to take this trade, but it's non-farm. It's non-farm. What are your expectations for PAX?
I feel at the non-farm, the farmers who the account farmer are gonna get hurt. I feel the range is gonna sweep this liquidity and then continue higher. I'm also looking for higher prices above 4100. But I feel before that happens, it will grab some, stops and then continue higher, because from the opening, from the daily opening, we just see consolidation, not any expansion. So I feel just taking out some money below the daily open and then continue higher. That's what mainly I've seen happen in the NFP. So yeah, are you planning to put some stop orders?
No, I never put the stop orders. When I was trading NFP, I never place limit orders.
Okay.
So I don't trade. I always trade the reaction. I don't try to guess where the price is gonna go.
So you are with the aggressive traders, not the passive.
No, because you don't know what the outcome of NFP is gonna be until it's released.
Yeah.
So you can try to analyze, obviously, the previous data and so far. However, if it comes to now, to the period of time, I don't see the purpose of it. With Trump and the data was completely off. The last year as well, we did have the government shutdown, and since then the data wasn't accurate as well. I don't really, I wouldn't really be thinking that this would be a smart choice, to be fairly honest, to place limit orders for me. What I'll do is I trade the reaction. So when I see the numbers coming out, I see the initial reaction, I see the order flow, and then I make my decision. So the order flow aligns with, if the order flow would align with the numbers that are going to come out, then I'm going to make a decision towards continuation, for example. If the order flow is not going to align, I'm going to wait. I'm going to see if it's manipulation, if it's stop hunts, for example, how the candle closes, and then take a trade. So, if it comes to non-farm, so non-farm is going to be like, it's expected to have 110,000 jobs added in June, right, 2026, which would be the smallest monthly increase in the last 4 months. We had previous 3 months stronger than expected labor market. If we have only 110,000 increase in jobs in June, it's going to be smaller than the previous 3 months. And this is what we talked yesterday about. Realistically, it is not the positive data for the US.
Yeah.
Because the fact that they are adding more jobs would mean that the economy is strong, and the inflation is going to continue to rise, so at least it's not slowing down. However, the market is going to likely see this circumstance as what trading economics suggesting, as it's the smallest increase in 4 months. So they're probably going to see this positive rather than a negative. Like the increase and the speed of increase of the labor market is slowing down. So it's going to probably trigger a hope towards the slower economical growth and potential hope somewhere on the horizon of the interest rate remains stable at least and not been hiked again. So, it's about comparison. It's about how people, like, what are people's expectations and fears at the moment? And is it better or worse, not only towards their current data, but also towards the previous stats that we had? Yeah. Wait 1 second. I had actually. Sorry?
You're loading that PDF.
Which videos?
No, PDF. About the NFT.
Yeah, I have it actually. Should I pull it out?
Yeah.
I kind of. This PDF, I don't remember how many years it's old, but probably 5 years.
Oh.
if not less than this. If not more than this. 1 second.
Finding that would be a hard job.
Huh?
Finding that would be a hard job for you.
Well, thanks to MacBook, it saves all the evidence for years.
Yeah.
Even the things I don't want to see anymore. It's like so difficult to get rid of it from the iCloud, but I did find it. I was like, I'm pretty sure I have it somewhere. And I do. So some time ago, guys, I was hosting something what was called the NFP. So it was like a fun, high risk trading, scalping during the NFP. So we didn't place any limit orders before NFP. It was the same principle. So I was waiting until the data is going to be released and then making my trading decision based on the release of the data.
The number, yeah.
So if we look at like in general, this file, what I was focusing on is, first of all, like, what are the NFP components? Because a lot of people know what NFP is, but they don't really know what the components are and what are they reflecting. So every single NFP release consists of 3 different parts, 3 different components. It's the NFP numbers themselves, it's unemployment rate, it's an hourly wages. And all of them are released for the previous months. NFP numbers are not always 100% accurate because they include different factors. But overall, the NFP numbers mean that how many new jobs places have been created or lost during the previous calendar months. The second one, the unemployment rate, it reflects the overall unemployment rate over the past months. So the amount of the percentage of people who are completely unemployment claimed unemployment. We can track also approximately the data that is going to be coming from the unemployment rate by the weekly unemployment claims, continuing any new ones that have been released every single Thursday. So accumulation of those will be coming down to the unemployment rate. Mm-hmm. And the hourly wages is, in other words, how much workers are earning on average in different sectors of economy. Yeah. Now, that's not included their... I'm missing the word in English. The farmers' jobs. So that's not including, this part of economy. And then I had several trading rules at that period of time. Now, that being said, of course, NFP changed slightly. And the reason I stopped trading NFP is because their liquidity shifted. And instead of going one way, the market started to have the helicopter kind of moves where the price goes up or down and then reverses and comes back to the same exact area, which is not giving you the opportunity to utilize the movement, because it's coming back either to kick you out on break even, or it's a high risk trade because it might reverse all the way back and you don't know if it's a stop hunt until it happens. So, but these rules, these 8 rules are they can help you to trade any kind of news release. And if it comes to their trading it on the prop account, the first rule, which is about the risk, so no more than 1% risk of your account, if it comes to prop, I would cut it to 0.25, because you do need to include the possibility of a slippage. Yeah. Where your orders are not going to get filled and the stop if it happens to be, not going to get filled. So chances are that you might not be able to get out of the trade on time where you expect it to be. So just to protect your account, I would personally cut it to 0.5% of the total capital that you're managing with a prop. Now, second, obviously, you do need to calculate the risk to reward before entering the trade. It's like an obvious rule, but this PDF was created for beginners traders, completely beginners, right? So you do need to calculate this and know how much you're risking before you enter the trade, and not just randomly put a stop loss somewhere based on hope that you're gonna you're gonna earn a lot of money on the spike of the volume. If it comes to also NFP, it's better to trade one trade at a time and not enter multiple positions, not multiplying your risk and not adding to the position. Because when I trade, I normally add more positions to the winning trade. So when the trade is already in the win, I compound that and I move my stop and I add, I build my winning position by adding more and more volume. Now, the problem with NFP and with any news release is the price might reverse very fast. So you might have a spike, but the price might pull back immediately as well. So if you are entering the trade and then you compound and you enter another position, you're most likely going to get some time in the situation when the price starts pulling backwards. You're not on time to move your stop loss. And on the other hand, if you do enter multiple positions across different assets on the news, it's moving so fast that possibility of you managing it correctly is very limited. So I also wouldn't do this. If you do decide to trade on the news, especially on such kind of news releases as NFP, then at least focus on one trade at a time to utilize the volatility if you want to do so. And move stop loss to break even. 25 pips, it was for the Forex. Again, this PDF was created like ages ago. I unfortunately didn't find the PowerPoint version, so I only have the PDF version, so I wasn't able to adjust it. Mm-hmm. But it's not 25 pips. Let's say it's 50 ticks, depending on the asset, but let's say 50 ticks on average. If you are trading PAXG, if you're trading Bitcoin, 50 to 100 ticks, because the price is moving very fast, the volatility is much higher than it was 5 years ago when this was created. So let's say 50 ticks and better move to blobs to break even as well. Secure partial profits, some basic things basically. But then in general, like the whole idea of trading any news is that you never trade the actual news release, you never trade the actual numbers. Because if it would be that, then it would be extremely easy and everyone would be making lots of money on the news because you just see the data and you react on it as fast as you can. That's a principle. It's not this easy. Unfortunately, I wish it would. It's not this because it's expectation. And that's what we talked about in the beginning. It's comparing the actual numbers to people's expectations. It's comparing the actual numbers to people's current fears and what they are focusing on. They might be focusing today on the labor market. Tomorrow, they might be focusing on the lack of the economical growth, for example, right? In a different circumstance, not at the current moment. The day later, they might be focusing on the war and the effects of the war. So the labor market data will be perceived through this prism. So you need to be able to trade the actual data. You need to take into account all the factors around it, mix it up and understand where the people's attention is going to be turned. So long story short, you actually trade people's emotions. You trade people's emotions, nothing else, if it comes to the news release.
Yeah.
So don't be surprised if the movement of the price is the opposite to the numbers that are going to come out, because it might be this. For example, this NFP, it might be this case. We might have again increase in the job places, but it's going to be most likely perceived positively because it's lower increase in the last 3 months. So these kind of things. And of course, if you are not ready to react fast, you're not ready to lose money, just don't trade NFP.
Yeah. I mean, it also depends on the software they are using. Many times, even someone is trying to trade, imagine the volume is so high, even though candles will pass your stop order, limit order, it will not get triggered. And then it gets triggers and you will see yourself in red, because that's something that happened with me before 3 years. I was trying to put a stop order, candle went so fast in 1 second that it didn't hit, but after a few seconds I saw my coin was gone. So it also depends on the machine that you're using. If it's weird platform, then you're already at risk, even though if NFP is going to move slow or fast.
Yeah, 100%. I agree. That's true. So if you do have, normally if we had an increase in job places, we normally should have the higher dollar, so the dollar should go up. However, if it's going to be perceived positively that the increase in their job places is less than the previous 3 months, then chances are that we are going to see the dollar dropping, because people are going to be expecting the stable interest rate, or at least not the hike. And no hike means that somewhere in the future we're potentially going to get a cut. Yeah. So if it's going to be perceived through this lens, then we are most likely going to see US dollar dropping. So the previous numbers was 172. The current ones are expected to be 110. Unemployment expected to be remain stable, and the hourly earnings, so wages as well. Yeah.
And if you see at the DXY chart, we had this bear candle, same you can say inverted bull chart. If you talk about DXY, it dumped, I think, from 101 to 100 yesterday, and there is a chances that it can continue from this. If we talk about price action, it can continue lower, because it broke below this lower low. And for the continuation, if you apply the fib and stuff, assuming there will somewhere around here there would be a reload zone or something, or a point of control in near this area, the price can continue lower after the NFP. And how many time is left? I think it's 3 minutes, 2 minutes. In 2 minutes, no, not 2. In 7 minutes we'll have the NFP. So let's see what happens.
In 7 minutes.
I'm actually going to keep my eye on the DXY.
Yeah.
Okay, someone is spamming hundreds emoji in this chat. NFP is actually very crazy. It is crazy if you are in, but it is crazy if you take trades without some analysis. Even if it's economically based or it's technical based. We have 15 people watching. Let's see how many likes we have before the NFP news. 16 people watching.
Are you planning to do the giveaway today?
I don't think so, because there are only 12 likes, but 16 people watching.
No, but if we are going to have a target on likes, are we doing there? I think if we can do 50, we should definitely do 2 giveaways. What do you think?
Yeah, that's a good deal. So 50 likes and we do 2 giveaways. You guys will have 2 chances to win an account. We'll do it when Anastasiia is done explaining the order flow presentation, the continuation of our session, which we'll do after the NFP. So there is a lot of content today. It's NFP and the order flow presentation and then the giveaway and stuff. Till the end, something will always come up to keep you guys active. So what's your view on the Bitcoin? It is still in a range. I mean, it's going up after again taking the lows.
Let me reshare my chart. Was on the economic calendar. So for the US dollar, first of all, because that's gonna be determined, and also in general the Bitcoin chart as well. So for the US dollar, if we look at the daily time frame, we took the high almost from the previous time we went to those levels on the 12th of May 2025. And the price started to pull back down. So on the daily time frame, we see in general the huge bearish candle futures trying to close as an engulfing candle. If we look at the 4-hour time frame, it does look like we had the impulsive move down, the correction after, and then continuation further to the downside.
Yeah.
So just purely from the market structure perspective as well. Mm-hmm. This is 4 hours. We are now pulling back from this high volume cluster. So we see that the price is trying to pull back higher again. On the 2-hour time frame, we place the volume profile over this whole consolidation. We will see that we have the value area approximately between 100.9 to 101.1. If the price does go back into this area, so something between the value area low and point of control, 101, this would be interesting area for me to consider selling DXY, which would also mean looking for some upwards movement on gold and on Bitcoin at the same time, and obviously on currencies as well if someone is interested in trading currencies. So this is my point of view on the DXY. Considering that this is a DXY, if you look at gold currently, for some reason my futures doesn't update, although I made a payment 2 times anyway. So if we look at gold currently, this is what we talked about before. So I was looking for the upwards continuation already from this area because this is the point of control of this week and a month, because we are just the 2nd of July. So it's a new month's opening. So I would be expecting the continuation higher if their data is going to come out the way it is, the way we expect it to be. Yeah. And if the DXY continues to go down after hitting the value area and the point of control, then I would expect the continuation to the upside on the on gold. And for Bitcoin, before we have our non-farm hidden, Bitcoin seems to be out of the range. Seems like we did take the previous low here, so with a week. So we had a stop hunt, and I did get my stop loss triggered. It was only $100, so not like a big stop loss finally, but it was a big small position. It was hovering around break even and a little bit of profit and loss yesterday. Mm-hmm. So it did accelerate to the upside again. Now we tested the point of control of this week, so and June as well, and we did break the previous highs. What I like is that we first had a week, so liquidity grab, the attempt of buyers to push the price higher, which failed. Then one more attempt which failed, but already tested the point of control and created the higher high. And now the price was able to actually hold above. So we had the closure of the candle and the acceptance of higher prices of Bitcoin too. So if DXY goes further up, I'm expecting Bitcoin to go today to at least 61.7, which is the minimal, and then the area between 62.5 and 62.6 zone. So I'm bullish today. Okay. Within a day, I'm bullish. You?
I mean, yeah, I am. There were a lot of stop orders placed in the liquidation heat map. But looking at the Ethereum, I think it's gonna take the swing high first than the Bitcoin, because Ethereum failed to take this low and kind of made double bottom. And I feel it's the best pair for looking for longs than the Bitcoin. You can clearly look at the structure. It is telling you, screaming a lot, that the buyers are more active on the Ethereum than the Bitcoin. So I would look for longs on Ethereum than Bitcoin, and I feel this can be the best target for the longs on the Ethereum. What do you think?
For Ethereum for longs?
Yeah.
I don't know. We have NFP. Let's talk about Ethereum afterwards.
Yeah. In few minutes, in seconds, I guess. No, it is. Okay, it's going down.
Now,
dollar is going down.
Yeah.
Look at that one candle. What's happening to the gold? Gold is going up. It's exactly as you said. I think it's gonna cross the 4100 area on the gold.
Yeah.
Next time I will listen to your signal. Next time I'll do it.
you can send me the percentage afterwards of the win, I
For
work
sure.
on the
For sure.
profit split.
For sure.
Accepting the how to say it.
Yeah. Oh, so we have a question, Anastasia. Unbiased Trader is
Yeah.
asking, which news you think are very important? NFP, Fed, and ...
Again, sorry, I was looking at Bitcoin.
Yeah, which news you think are very important? NFP, Fed, and so on.
NFP I don't consider really important, to be fairly honest with you. NFP is volatile, but not so important. For the labor market, and depends what you are talking about, right? The majority of the events that are important, they start with the housing data in general. That's for inflation afterwards and for the rates. Everything that is concerning the rate decision is important by default. So everything that is concerning the rate decisions is important. So the FOMC rate decisions, the FOMC economical projections. Regarding their inflation, it's CPI and PCE. Regarding their labor market, it's, I would say, new job, well, NFP, yeah, but kind of more volatile than anything else. Realistically, we can get a data from the weekly unemployment claims. It's less volatile, but it creates a very good picture. And their new job places, job openings, and job quits.
Yeah. And
then the GDP growth. A little bit less volatile and less that average traders pay attention to, but super important as well as PMIs. Because Purchasing Manager Index is based on the questionnaire, so it's not the data. And because it's a questionnaire, and because they call the Purchasing Manager Index purchasing managers in the companies, and they ask them essentially, how would you evaluate the company's performance? How would you evaluate the amount of new orders that are coming? How would you evaluate their growth of the company and the economical projections and so on? Because of this, it's faster giving us the estimation of what is going to happen than the data, because until they calculate the data in a bureau and release it, it's delayed. So the Purchasing Manager Index, because it's a questionnaire, it can give us the estimated picture of the economy faster than anything else. So yeah, but we can, we talked about it yesterday. We actually, I think we can make series after the order flow, we can make series of like macroeconomical series, for example, where I can break this down one by one.
Yeah. So that was really, broad answer to the question. So now you know which one is important, what is important. It's not about the news, but the things happening behind. And we have Gerard saying that he shout out to his friend Marquis. I invited him to join today. I really appreciate Gerard. Please bring more friends. we have like target as well. Messi. I'm actually Ronaldo fan, not Messi fan, but I'll take it. We have a lot of spiders at the moment due to summer season. Tradeify, you can join them. Yeah, I wish if I had that ability to throw webs. Right now, I'm just putting stone on my heart because the goal is just making an Eiffel Tower. Not a single pull web.
Oh.
Look at this. It's just one candle.
Yeah, but DXY as well, no?
Yeah, DXY as well.
So.
Look at this DXY. I don't know why, but DXY and gold, that's very correlated for today. Not always, but for today, yeah. When I started the goal, I used to use the correlation, but later on I realized that no, it doesn't happen always. So yeah, let's continue with the price action of gold instead of the price action of DXY.
I'm really happy somewhere in depths of my heart, the market is closed tomorrow because I'm starting to feel FOMO after the last 2 days because I haven't traded the yesterday's pump and I'm not trading today's one because it's an FD. And you know what? I'm very happy it's holiday tomorrow and the market is closed.
And I know it makes us more happy when we make some money and there's some disaster happening in the market and you are safe. You're about to request the payout and stuff.
Yeah, but when you are just sitting on and you are not doing anything with it, and it's like, yeah, oh, ouch. I almost feel the physical pain right now.
Yeah, I get it. Oh, yeah. Jorad is saying that I pronounced his name for the first time, but it's not me pronouncing. I heard Sensei pronounce your name, so I was like, he says some Jorad and stuff. So yeah, I remember that. I don't know. I still can't read it. And I don't know. Your name is so difficult. I can read any name, but not yours. I am a Spider-Man fan. Me too. I am a Spider-Man fan too. That's why I do this stuff on live. Just living my childhood. It's on a stream. How many people do we have watching us? 26 people, 29 likes. Okay. We are very, very, very good, doing good. I think by the end of the day...
You're actually doing good. If we're going to have 50 likes hit, we have 2 giveaways today. Not one, but 2 giveaways. Yeah.
Also, Mike, if you... No, not Mike. Sir Mike, if you're watching our live stream, please write something in chat. I have prepared something. And if you're not live, I'll send it over to your WhatsApp. No matter what, somewhere, the message will be sent. Oh yeah, the robot is saying we can watch new Spider-Man movie. Yeah, it is going to be released at the end of the July. And I don't know, Anastasia is not a Marvel fan, but you should watch it. Anyway, it's the craziest movie releasing this month.
No, I will watch it, of course. It's not that I don't like it, you know?
Yeah.
I might not be like a crazy fan, but it's like you have to.
Yeah.
You just have to.
What I'm planning is I'm gonna wear this attire in the theater with the Tradeify hoodie, and I'll record it. I'm planning that, but I'm just gonna be in the contact with the theater and stuff to get the permission for the camera and stuff. If it is done, it's gonna be crazy. I'm gonna do some experiment. And please pray that he allows me to do this kind of thing, because when you wear a mask, you don't really care what people think. When you're not wearing a mask, you do care what people think. So I'm just gonna go there. Maybe.
Why do we care so much what people think?
No.
You know, I've learned for the past year that whatever I do, if I walk in a Spider-Man's costume somewhere, it's none of their business. So. You can do whatever you want, as long as you don't get kicked out by the security of the cinema. For the rest,
that's what I'm afraid of. That's why I'm asking them about the camera and stuff, because they think I'm gonna shoot the movie, but I'm gonna tell them that I don't have enough time to shoot your movie. You know, I'm just a real fan. I'm just gonna watch it, and we'll do a little bit a Tradeify advertisement. I hope they don't charge some money for that. You may saying people do what not in theater, so you are fine doing that. Yeah, that is correct. But I still gotta find out. And I don't know, DXY is just gonna die today. We are at 100.642. And let's see what's gold doing. Gold is the same thing. I think it's not gonna stop. 5,000 today.
Gold is going completely insane.
And
I'm trying to load the order flow platform, but it's hanging so much. I think because of the camera.
Let me do it.
Yeah, I'm trying to see the order flow of. Wait, I'm gonna disconnect my screen for a second. And switch to Atas. Think it's better? Oh, nice. I'm gonna be back in just 1 minute then. I'll rejoin with Safari.
Okay. So it is you can share my screen. Thank you so much. Okay, where are my indicators? Look at this thing, oh my god, I think I have to turn off this. Yeah. So price made this. How I would look this if we had a little chance, to take a trade in this area. And I don't know, the 5 minute looks really disaster right now. Let's go to the 15 minute. And I will change. This is not the volume profile of the current day. It's calculated for the previous day as well. So yeah, the current day. I know the spike is really weird, but that's how I use it. I like the width to be at the 1000 or maybe at 90, so I can watch the supply and demand area, and you can see how price is tapping the daily VWAP for 1, 2, 3 to stay higher. But look at this news candle. I feel we might push back lower. Look at this volume profile. You can't actually read this animal. It's just, look at this. It looks like a box. I think the Spider-Man villains are more beautiful than this volume profile we have on the gold right now. So let me know if you guys have any questions about the software and stuff. Okay, we have some people chatting a lot of stuff in the chat. Let me read it. Anastasiia should dress up like a Wonder Woman. I think she already mentioned about the Catwoman. She already has some costume and stuff. We'll do it, I think, for everyone. I think Jonathan should be Iron Man, and Alex should be he more looks like Captain America, and Roman can be Hulk because he's a technical scientist, so he can be Hulk. Hulk will look good on him. And for Mike, it is Doctor Strange because he has that beard and stuff. So yeah, we're gonna form an entire Marvel studio at Tradeify Crypto. Anastasiia, okay, so Anastasiia Robot wants you to dress Aspire Capital. Welcome back to the stream after a long time. Hi team, I made a proposal to work with you, but response stopped randomly. You can reach out to Jonathan and on the Discord maybe if you want to give it another try. Bona Pips, she's going to get her. Oh no. Oh, we have Sir Mike. I was actually waiting for him. Mike, if you are watching with your son, let me know. Please, I have time. I'll do it right now. Write something in the chat and I'll do it. Cinemax Donald, what a really confusing and interesting name you have. Anyway, let's see how many people watching. 27 people watching us. Hit the like button. At 50 like, we do 2 giveaways. And yeah, let me turn on the bubbles and do some settings so my chart would not look horrifying. Circle. Let's see. Let it load. The only problem with this platform is that it takes some time to load stuff. It will never show you instantly, even if you have a very good internet speed. So yeah, look at the sellers getting absorbed at this price. Another seller. Yeah. 1 million like are coming, I feel it. Oh, if you buy it, if you can buy it, 1 million like, then we can do it. So yeah, Alex is more of a Captain America. I agree, because he have that kind of that muscle and stuff, So he will look like a Captain America. And why I said Iron Man for Jonathan is like because he has some, very amazing table. He has some lights when he speaks, they blink and stuff. And many more things. That's why, and he uses Claude. So he's more of like a technical guy. So I feel Iron Man will suit him. And also I call him Sensei. So it's good. It makes a good bond between, keep it consistent. Mike, he's here. Mike is here. Tradeify. I know Mike is here. We are here, buddy. Yeah. Okay, we are here. He said we are here, buddy. I have something for your son, which I'm gonna just speak, which is not my language. Okay. Okay. So here we go. Everyone, keep your ears, all ears here. So 1, 3, 2, 1, go. Szybkiego powrotu do studiowia. Jesteś naszym mistrzem. Stimami zaciebaj kiczkoje. And what that means, if you know in the chat, please write it. But I want you guys to spam champion in the chat for Mike's son. Please do it. Spam it. Not for the giveaway. We'll do it giveaway for later, but spam champion in the chat. And if you understood what I said, write it. Write it for me. I'll be very happy. Okay. Finally, a black candle in the market. I think it's same thing would be happening on the go in the. Let's see what Sankey doing. I know it's okay. It has to load some data. It's crazy. Oh, so the message was received. He replied, the message received. I don't know how well I did, but I'll try to learn. I'll try to learn. Keep spamming. It should not stop. We spam it like we are gonna queue so many accounts. Oh, thank you so much. And then mission is accomplished. Mike is saying that I put a big smile on his face. That's what we do at Tradeify Crypto. We make trading fun and everything fun, So yeah, you can see there are a lot of candies in this. Oh, look at hazy sunlight. Thank you so much. Yeah, I like that. I'm not gonna say anything that you're spamming, but that's what exactly I want. Glenn, thank you so much. Hazy sunlight, thank you so much. We are currently building a Star Wars Lego thing in his hospital bed. Oh yeah, I actually love that. Okay, so yeah, I love the language. I know it is easy. It's so easy to speak. I actually try to speak Russian, but I know if I'll do something wrong, Roman would get angry. So I'm just being careful. I'll learn properly and say it again. So let's go to the 30 minute. It's just one candle straight up, and I feel you can look at this as I explained in my video. Whenever we have a lot of volume, and one more thing, at the highs, make sure to take a look at buyers getting absorbed or sellers. And also one more thing, I'm going to bring a heat map on this channel where I'll explain or maybe share live explanation on how I use the heat map on the lower time frame. And it's going to be really amazing for GC, for BTC, for Ethereum. Yeah, I like it. Good, everyone. Thank you so much for writing champion in the chat. Anastasia should be a Black Widow, Asia Romanov, and I think Roman should be Russian beer guy. Come on, I don't know what you're writing, robot. You have to eat the cake. Did you manage to buy a cake? You always write cake in the chat. 26, oh, let me reload my screen. 51 like and 27 people watching. Roman, are you watching? The guy who buys the like is here. It's 26 people but 51 like. That's fishy. Anyway, I'm happy. So if you are here with us, can you make it 5,000 or 6,000? So let's see. I feel this gap. Whenever price moves really fast, the low volume will create. This becomes as a support level, for the continuation stuff. So what I would like to see gold do is come back in this range. Marcelo is saying, "Are you from Europe?" I love it. Your guess is really wrong, but I love that you're so wrong. Never ever enough, is it? Yeah. How they more like than people? That's the magic I am also trying to find. Bona Pips. Me and Roman are searched in that for the guy who maybe gives us some like for the giveaway. Whatever he's doing is good, but I'm just gonna make sure that he spends his money perfectly, so we get all the likes. Soon 1 million likes. That's the goal. That's the goal. 1 million like in a stream. That's the goal. Welcome back, Anastasiia.
Thank you. How is my speakers now? Is it okay?
Yes, it's perfectly fine.
Amazing. Well, it finally did load. So what I was trying to see is how on this run to the upside, which is like insane. This 5-minute candle is just insane. Well, yeah. It's like 625 ticks.
Exactly.
In one candle.
Entire week profit in a week, in a candle. Sorry.
It's just crazy. But anyway, what I was trying to see is how the volume was distributed over this candle.
See your screen.
Sorry?
Can't see your screen, Anastasiia.
It's sharing when you reshare it. I was trying to switch to Safari, so yeah. Let's try again. Is it now?
No.
I'm gonna rejoin.
Meanwhile, Mike is saying that you can test my Polish. Can I speak? Can you rate my accent?
Go ahead.
Okay. So 3, 2, 1, and go. Szybkiego powrotu do zdrowia jesteś naszym mistrzem. Tyś mamy za ciebie dziękuję.
You know what? Considering that Polish is probably one of the most difficult languages on earth, you did amazing.
Thank you so much. Thank you so much.
You did amazing.
So do I sound like a native Polish speaker?
You sound like you speak Polish. I understood your Polish. I think that's great.
Thank you so much. That's what I want. Yeah, we can see it. Yeah. Okay.
Oh, wow, it loaded. That's good. Finally. Amazing. So what I was trying to see is how the price was distributed, like how the volume was distributed over this run to the upside. And we did have the majority of the volume, approximately 41.24 area, which were the majority of bid orders actually here, if I'm not mistaken. 1 second, because I can't really see it. This candle was just way too huge, fairly honest. We had the majority of the bid orders on several levels. Despite this price did continue to go up, we had another 143 bids here and another 100 asks upper. So we have mainly those two areas from which the price, from where the price might be reversed back to the upside. Technically, I would be expecting the continuation higher from now. I don't necessarily think we're gonna pull back all the way down, to be fairly honest with you. I think maximum that we're gonna see the pullback towards is 41.24, and from here we should be good to go further up, actually.
Exactly. Yeah. It formed a support level at the LV end.
Yeah. So I think we should be actually good to go.
Mm-hmm. So Anastasiia, we have a viewer asking, any advice for someone who just started with crypto prop trading?
in crypto from trading?
Yeah, crypto prop trading, PROP.
Crypto prop trading.
Yeah.
I mean, I think it's pretty much the same as what we talked about yesterday, right? In the first place. I think it comes down not to what you trade, but how you trade it.
Yeah.
Because you can trade whatever you want, whatever it's crypto prop trading, or if it's like a normal futures, like a standard futures, or whatever it's even Forex or CFDs. For me personally, the most important I'd say is how you approach it. So if you approach it correctly, and you approach it with the right risk management and expectations, I think this is where it's going to be a very good start. We had a very good conversation, I feel like, yesterday about this. What are the most common mistakes that people do when they start trading prop?
Yeah.
I'd say don't really try to pass it just differently than if you would be trading your live account. And also make sure that if it comes to crypto specifically, I'd say since crypto is very low now and there is less interest, I think the ability to stay away from the market until it moves and not jump into the market way too often in attempt to just be in a trade is going to be crucial, because since the market is low and the interest to the crypto market is lower, there is lower liquidity, there will be lower amount of opportunities than compared to the extremely bullish market, for example. So you need to probably wait and be patient, but for the rest, it's just any other thing, any other trading. What would you think is the difference between trading crypto prop, and anything else? I'm actually in a buy position for Bitcoin as well right now. I'm gonna cover it in just a moment.
Mm-hmm. And also, I think we are very close to an end of the first hour and begin the second hour with the presentation. Just a reminder.
Yeah.
So yeah,
but
guys,
what do you think about the difference between the crypto prop trading and the regular futures, for example?
I feel if I'm switching from a different, markets, from maybe futures to crypto or crypto to futures, I'll make sure whatever type of trader I am or maybe model I have should be flexible for me to get comfortable there as well. It should not be like I'm dealing with a different kind of price action and stuff, and something entirely new. Maybe the time frame and the trading, trading side could be different, like not trading on the lower time frame and trading on the higher time frame and stuff like that. But I think there is no difference in terms of the market structure and the market cycle, even if you're talking about the indices and the crypto or the gold and stuff. So it's like making that model so flexible that you can use it everywhere. So that's my take on the crypto form, because when I started trading the the Forex market, the same way I trade the crypto, by the correlation and stuff. Like in the Forex, I used to use the GBP and the EU and the DX5 for the correlation. In the crypto, I use Bitcoin and the Ethereum and Doge and stuff. So nothing really changed for me, to be honest. That's my take on this thing. So just try to test whatever you used to, or maybe in the previous market. I'm assuming you're from the future. Try to test it in the crypto as well. Let's see. I'll test for a few months and gather the data and see how it works.
I think get the data. Yeah. This was a key, because just directly testing what worked for you on a Forex market, for example, on futures market, without the adjustments to the crypto market as it is right now, then it's probably gonna backfire. Mm-hmm. I mean, the system can still work, but definitely with certain adjustments, I'd say. Yeah. I'm in a long for Bitcoin after the non-farm, because I was trying to reload the platform where it's like it wasn't doing good, and I'm happy it loaded now. So we did have here, this is the reason I was entering the long actually in this place, and because it was just a couple of ticks above this level that I was looking at. If you look at the Bitcoin, so we had the jump yesterday and we had an absorption of sellers. So we see that the sellers are trying to, one second, something that we talked about one of the previous weeks as well on the order flow on Thursday. So we did have a very active amount of sellers coming into the market. So we had here 466 bids, and the price still went up. And then we had another thousands. So there was in total more than 7,000 bids in one candle, where there is the price still closed bullish. So that was an observation. So the sellers were hitting the bid. The price was trying to go down, but it was facing the buy limit wall. So the sell-buy markets were filling in, but getting filled in, but it didn't produce a result, and the price still jumped back up. So we had a very good example of absorptions here, and despite lots of bids, we did have also majority of the imbalances on the ask side. We see that the price did afterwards test this area multiple times, and this area became one of the key levels for Bitcoin on the smaller perspective, smaller time frame. So we have the level approximately 61.3 to 61,250, which is going to be a key level for Bitcoin. So the reason I entered this trade is because we saw again the attempt to go lower, again closure above it, and then again the test. And now I'm expecting the price to continue further up. If we can break the zone of imbalances here, because that on the other hand, we did have an absorption of asks, unfortunately, on the NFP for me. So I'm kind of hoping here that the price is going to continue further up. I'm going to move my stop loss just below the previous here area of their sellers absorption yesterday, and below this huge ask cluster as well, bullish cluster. So I'm going to cut my risk approximately 2 times almost, because it was $500 risk. I'm going to cut it to $260 plus fees. So if the price is able to close above this bright green area of the ask imbalances and the bullish absorption that happened, then I'm going to be good to go, and I'm going to move my stop loss to break even. The reason I'm not moving my stop loss to break even is because the market is quite choppy during the NFP. As we can see, it didn't go straight back up, which I'm still expecting it to do so. And then I'm going to be aiming towards, let's see, if we look at the 30-minute time frame. We look at the 30-minute time frame, my target would be approximately here. So the zone between 62.5 and 62.6.
Yeah. So you're trying to target the range.
Yeah, I want to target the middle of the range.
Yeah, exactly.
So if we look at, it's not loaded, but yeah, it's a middle of the range above it. So 62 point, let's say 62.6. That would be good. That would be good. How many likes do we have? How many likes do we have now?
We have 52, I guess. 52.
53 likes.
Yeah. Can you believe that?
Okay, so we are up for 2 giveaways today.
Yeah, we are.
Nice. And we are up for the time for our order flow lesson, order flow time.
Yeah, exactly. So guys,
just 1 second.
take your pen and paper if you don't have any. You have some time to grab. And we'll do the giveaway after she is done explaining the things, because, you know, even if you win an account, without the knowledge, you can't trade it. So first, take the knowledge, then we'll do the giveaway.
Yeah, just cleaning my chart a little bit because it's like got so messy, it was irritating me. So here we go. If the price will be able to break this zone, I'm gonna move my stop loss to break even. That's good. Right. Okay, it's interesting because it seems like streaming on Safari is breaking my Safari. Because I can't now open YouTube with the comments in Safari. I never had this, it's interesting. I'm gonna open it in Chrome, we can get started.
Yeah.
So I know we have any. Are you trading anything today, Tradeify? Or are you
No, not with the mask.
completely? Yeah. No?
Oh, I think I didn't heard you because there was some kind of lag when you said it. Me?
I was saying me?
Yeah, thank you. Me.
Just checking. There we go. Now what I'm gonna do, I'm gonna make sure that we have the stop loss at break even and there we go. And the platform closed, and then we can be good to go with the order flow. Can you hear me?
Yeah, loud and clear.
Yeah. Perfect.
Now it's gone.
Here we
It's
go.
back. Yeah.
I think we are good now.
Yeah.
Great. After the battle with my technical weak side of my personality, I think we can get into the strongest part, the stronger part. You know what? Since we talked about volume and order flow the last weeks, I decided that we can take it a step further, because what we've been talking about is a separate trading methods. We talked about several ways of using volume profile. We talked about several ways of using order flow. We talked about the combination of different volumes and order flow and so on. I do have more of these things, and I do have more of trading methods, and we can talk about this for a long time. And I will be bringing more as well. But what is very important is actually how to use it and how to build the context of the market before the execution. Because a lot of the times we go directly into the volume. I'm gonna. This is. I don't know if it's funny or if it's creepy.
I thought you can't watch me, so I was doing for the. I was getting ready for the presentation.
I have it on the second screen. Just taking the eye out. Well, if I'm gonna be dreaming about this, I'm gonna send you a message afterwards. If I can't sleep.
Sorry,
No, it's funny. It's super funny. What I was saying is that a lot of people, like when they find out about order flow and volume, they get excited and they just try to mix it up with whatever they have already, or just use it as a separate standalone trading method. But what I want to talk about today is what comes before that. So what comes before the volume analysis, what comes before the order flow. Because what I do every single week, every single weekend, and then every single day is building and then following the context and the bias that I have. So every single weekend on the higher time frame, I build my context for the week, the preferable direction of the price to work within this bias for the entire week. And then every single day when I open the charts, before I look at the daily volumes and the daily order flow, I check the bias and I check the context. So, the question is essentially why the context comes way before the entry signal from the order flow and from the volume, no matter how good they are. Well, it's because if you execute the trade within the context which aligns with your entry signal direction from the two tools that you are using, the probability of you actually coming out in a profit is going to be extremely much higher than if your entry is just taken out of the context that is currently running in the market. So to maximize the effect of all the order flow and their volume analysis, and to make sure that actually brings you the result that you expect and not the random ones, you do need to take the context overall in the account, and how you build the context can be very different. So today I want to show you how I build the context myself before I look for the confirmations and entry signals and then exit and managing the trades and so on. So there is a quick context checklist that I prepared. Those are the things that I personally look at every single time, every single weekend and every single day. And depending if it's a weekend or if it's a day during the week, there will be slightly different time frame, which I'm going to cover in just a moment. So first things first is a trend alignment. So I choose my preferable direction over the weekend, and then I check, is my ID of the trade, so is my market ID, my trade that I'm expecting myself to take, I'm planning to take, is aligning with a dominant trend, or am I trying to go against the current? Because, and the way I check it, and it comes with together with the second point and nearby levels, is I analyze where are the closest important levels for the price. And I analyze it using the tools that we've talked about, specifically volume profile. So if I take, which I'm going to show very later on, if I take the high time frame, which in my case, I'm an intraday trader, I use the weekly and daily and 4-hour time frames and the volume from the monthly and a weekly to check the nearby volumes, like resistance and volume support zones. So the big volume accumulations above and below the price. What are the closest levels where the price might get a reaction? By analyzing those levels, you first of all determining, are you actually trading within the volume area, which increases the probability of you getting stuck in a range? Are you trading towards the big volume area, which means that you are in a trend, and then you need to check in which one. Are you trading the prices going from the bottom volume area to the upwards, or from the upwards to the downwards? Or are you trading just below the big volume area and you're most likely going to hit the resistance, or just above and the price is going to hit the support? This is extremely important because you pretty much have an ability to understand where the price is going to reverse way before it gets there. So if you have this opportunity and this privilege and this like power over like most people who don't check the volume areas, then you should be able to use it, of course, for your benefit, right? So check this first and then check if the trend is aligning, or the market ID that you are about to take, long or short, is aligning with the overall trend. Now, next is a market phase. So in which phase is the market currently at? That's also something that volume helps you. So except obviously the false breaks and mean reversions, you are basically trading in a trend, for example. And if you are in a trend, then how far can the trend go? Which again is being determined by the nearby volume areas. And then the market timing. For example, like what I was talking about today, I was really close to take a trade before. And in this case, for example, if I would take a long, it would work out. And you might think like, okay, but you know what, if she would take this long that she was talking about 30 minutes before NFP, then it would be their huge like amount of profit because it was 600 ticks, right? Yeah. However, this time it would work out and the next time it probably wouldn't, because it's a matter of chance. It's a matter of being lucky. The market could have pursued the data from the NFP differently, and then you would get the completely different result than the one that we've got today. So is the macro timing actually correct? Are you trying to trade based on hoping that you're going to get lucky? Or are you trading within your checked system? And is there anything that can mess up your trade? Long story short. Yeah. Because if yes, then maybe you should be taking into account that it might not be the best timing. So for example, yes, it was 600 ticks move, but am I regretting I didn't take it? No, because if I would, next time I would probably enter the trade with this kind of movement, most likely going to get a slippage and not going to trigger my stop loss, which I'm going to regret 2 times as much as I would be happy to take the win. And then to be able to build the context is something crucial exists that called the market auction theory. And we've talked about the market auction theory from the perspective of bid and ask in the depths of market. If you missed this, it was all the way in the beginning, I don't know, 1.5 months probably ago, one of the Thursdays, where we talked about the depths of market and how the market auction works and how the orders are getting filled. The market auction theory can be also taken from the perspective of the market phases, where we have 3 market phases in which we operate. It's an efficient market, it's imbalance, which is called an inefficient market, and the price looking for the next balance, which is efficiency again. So the market always operates within those 3 phases. And understanding which phase you are at is going to massively help you to determine either you're going to trade or you're going to skip it. Something that a lot of traders don't take into account, and something that was a turning point for me, one of the main turning points for me in my trading, but it's helped me a lot, is understanding that my system is not going to always have the same performance. My system is going to have different performance, different win rate in each of those 3 phases. So in efficient market, my system personally is gonna perform the worst because it's going to be balanced market. And for me, based on the volume and order flow, I need an imbalance. I need inefficiency. I need the market being dominated on one of the sides. I'd rather have manipulations and imbalances and clear trend than balance and the calm market, because that's how my system works. A lot of traders, they don't take into account that it's going to be different performance, different market phase, and they get surprised. And I was surprised as well. I was choosing the strategy, I was trading, everything was going perfect, and then from one day to another, everything collapsed and it stopped performing. And I'm like, but what am I doing wrong? And I might do exactly the same thing what I did yesterday and exactly the same thing as I did 2 weeks ago, but the performance and results are going to be 180 degrees different. Why? Because the market phase is different. So what I'm trying to say is that make sure that you test in which market conditions and which market phase your system is going to be performing the best. And this is how it looks. The efficient market is the balanced market. In other words, it's 70% of the total volume in the market is going to be traded during the periods of the balance. It's when buyers and sellers approximately agree on the price of the asset, and the market is trading within the range. If the market is trading within the range, it's going to be there until something happens that shifts the opinion of buyers and sellers about this specific asset's price. It can be the macroeconomical data, like for example, NFP today. It can also be, for example, something else. It can be the Iranian war. It can be the data about inflation. It can be their speeches and the press conferences. It can be pretty much anything else. Unless something happens that is going to put the market out of balance and shift the opinion of investors and traders about the price of this asset, the price is going to stay there. When something happens and the buyers and sellers don't anymore agree on the price of this asset and they don't feel like it's a fair price of the asset, so the fair value, the value area, the price goes away from the balance and it's going to go from one balance to another balance. In other words, from one big volume area to another big volume area. Mm-hmm. What I want you to take as a conclusion from this, besides testing which obviously phase your strategy performs the best, and then deciding in which ones you trade and which ones how you manage the risk, because it also can be different, is understanding that your trades are going to be if you trade in a trend, if you trade in an inefficient market, is going to be an imbalanced market, because any trend is imbalanced market. If the price continues going up or down, it's because it's not in the balance, right? In imbalance, in other words. So one of the sides does not agree, or both of the sides do not agree on the price. So your task, if you are a trend trader, is to try and trade from one balance to another balance. And when the price exits the balance, this is your trading period. When the price enters the balance, this is when you stop. If you are a trader who trades in the balanced periods of time, so in the range, you completely skip the price, like the imbalance phases. Or you adjust the trading system and you have different ones, which is also possible. What helps you to determine essentially balances and imbalances is a volume profile. And the balance is determined by the big volume area. Any big volume area, like we talked about before, is an accumulation. So when the price is barely moving, it's usually accumulating majority of the volume. One, because it's in the balance, and that's where the majority of the exchange happens, the majority of trading happens. Secondly, reversed is because the majority of trading happens there, the market is in a range. So it's one is fueling another.
Yeah.
Because the big market participants, they cannot just push in the market 100K contracts, 200K, 5 million contracts, because first of all, their order wouldn't get filled immediately, or if it would affect the price, and they would get a slippage and they wouldn't have the price that they want to be filled at in this specific asset. So they need to divide it in many small pieces, which causes the volume accumulation area, so the range, until the whole complete order is getting filled. And then the market moves from there. So on the volume profile, the periods of balances, they're going to be reflected by the big volume area, the big histogram. The periods of imbalance are going to be determined by the low volume areas, or the balanced volume profile, where it's slightly volume but not a big volume accumulation spike. So there in a IMD model, which is probably familiar for those of you who trade smart money, right? And ICT concept and so on, is essentially accumulation, manipulation, and distribution. If we look at this chart, it was reversed. It was accumulation, manipulation on top, and then distribution. Accumulation is the balance, the area of the balance. Manipulation, in other words, is a stop hunt. It's a fake movement where the price goes outside of the range, just above the highs or below the lows, right? Above the highs here, below the lows here, where majority of the people who trade the breakouts, they're going to get stopped out. Yeah. And then the price reverses into their distribution, or in not balanced market, in imbalance.
Yeah. Liquidity grab.
So, sorry?
Liquidity grab.
Yeah, kind of, yeah. And if you look at it from the perspective of the volume specifically, this is approximately the patterns that you are going to see on the volume profile and the volume indicator, just the horizontal volume or the vertical volume. In the accumulation phase, which is the phase of the balanced market, you will most likely see low volume on the volume indicator and high volume accumulation on the volume profile. So you will see the big volume area accumulation on the volume profile, low volume on the volume indicator, vertical volume. In the manipulation, you will see an imbalance. You will see the volume spike. It's usually the spike of the volume, which is going to be filling in like lots of stop orders. And then the price reverses eventually on the opposite side. So what you will see is a big spike on the volume indicator, and volume profile is going to help you to determine if manipulation is manipulation or if it's already the distribution. How? I'm gonna draw it a little bit and explain. So basically, if the volume will be here in the bottom of their, and for example, that's one candle, and the volume is at the bottom, and the candle closes above this volume spike, then you will know that it's going to be the reversal most likely, and it was a manipulation. If on the other hand, on the volume profile, you will see the majority of the volume was somewhere in the middle of the move, and the body of the candle, of the breakout candle, closes below this majority of the volume, it's most likely the distribution and manipulation phase was skipped, and the price will continue lower. So depending on where the volume is, the volume, high volume on the volume profile, you will be able to understand if it's manipulation or if it's already the distribution. I'm going to show it in a second on the charts afterwards. An example. Then afterwards, let's say it was manipulation and imbalance, and the price reverses and goes to the distribution phase, which is also an imbalance phase, which by the volume is going to be characterized as a steady growing volume on the volume indicator and medium to low volume on volume profile, or the balanced volume on the volume profile, more or less. And then it continues, like this. So this is a practical cheat sheet on how the volume and price action work together, which is transferable related towards which phase in the market we are currently in. Which I suggest you just to take a screenshot of this, and you can save it, you can print it out, whatever, and just have it as somewhere when you build your context for the week and for their day, because it's going to help you to immediately determine which phase in the market are you in, and help you to make the decision regarding your bias. So if we have the low volume and the tight range, so the low volume on their low volume indicator, and the price is ranging, it's accumulation or it's a balance. If we have the sudden volume spike, when the price is breaking through the resistance or through the support, it's either going to be a stop run or the ignition of the trend, depending on where the volume was when the candle closed. It's my personal cheat sheet, right? Like a little bit using the volume profile to determine if it's fake out or if it's the actual beginner of the trend. I'm going to show you in just a moment example. Then we have either the sustained higher volume, so like a gradual volume increase, and the price is moving in certain direction. It's a developing trend. It's a distribution phase. It's when the market's, for example, moving up and the trend is slightly gradually increase, the volume on the volume indicator is slightly increasing as well, which is showing the interest of market participants toward this trend. So the market participants are supporting this trend. And then we have the extreme volume, but the price is not moving, or it becomes being choppy. Starts being choppy. So the volume increases, but it doesn't anymore transfer towards the results. So the market is not moving anymore towards the side where it was moving, or if it's moving, it's very choppy and it feels like difficult for the price to move there. It's usually the profit taking, absorption, and essentially the end of the trend. So this is the cheat sheet on how I use the volume indicator with the price action. And now I'm gonna reshare my screen to show you how I combine it with the volume profile. So I'm gonna open the Atas again. Hopefully it's not gonna hang, but if you have any questions in the meantime, I can also answer those while this is loading. Let me just check this chat.
So guys, meanwhile, spam your questions in the chat if you have any, because because the topic she covered today is, I don't know, you will realize it if you repeat it on the market and you realize she is sharing gold today, because this is exactly what market cycle is. she explained it using the volume profile and the confirmation and the market cycle and stuff, which works in every single market. We had someone asking, I'm new to crypto, what to do and stuff like that. This is what you have to do. Exactly what you have to learn. Market cycle, accumulation, manipulation, distribution. Manipulation will always land in the low volume node, and the distribution will. And Anastasia, I recorded the video on the same topic that I like to target whenever we have the imbalance creation. I like to put my take profit on the left where I have range, to use it as a magnet for my take profit, and I have never placed a take profit without any fair value area. I'm very scared if there is no volume. I feel like I'm gambling. So that's what you exactly shared, and I'm really interested. I'm happy that you also use the market cycle and have same view beside the market structure. It's not like higher, low, and higher, low. It's about market range, expansion, market range, expansion. That's how market works. That's the best explanation about volume profile, and absolutely loved it.
Oh, amazing. I'm really happy. Thank you so much for this. Because when you trade something, it's like, for me, it's like so normal that when I'm explaining it, for me, it feels like, okay, it's obvious, it's like obvious thing. But of course, like it's really nice to hear that, it helps as well. So hopefully it helps a lot of people on the stream. But let me just try to share, no, not this. Safari is a little different. Let me just try to share how it looks in reality. It's just like it's hanging slightly because I'm streaming at the same time, and Safari apparently is also not really wanting to work with me much today. Here we go.
Okay.
1 second. Yep, doesn't want to work with me. Here we go. Okay, perfect. So obviously we use a combination between the volume profile and the normal volume, and the same principle works on every single time frame, because the market phases and the market cycle is essentially across the multiple timeframes is exactly the same, right? The orders get filled in exactly the same way. The price is formed in exactly the same way. It's been accepted. It's been rejected. It's always the same way. Difference is just how long does it take for the price to be rejected or like accepted, at certain levels. Mm-hmm. So, for example, if we look at this area here, right, where we had the accumulation first. So let's even take the smaller example. Let's even take slower. So let's say we had an accumulation here, and then just 1 second, because I need to change the positive color here so we can actually see all of this as well. So we have the accumulation, right? And then we have the movement to the upside. Now, again, I didn't prepare these examples. It's almost a live market, so we're gonna see if I can find some good examples together with you. So we see the price starts moving, and what is very important for me on the breakout is that the price starts moving gradually, and the volume starts moving together with the price. So comparing how the price was increasing on the break of the previous resistances, first tier resistance and second tier resistance of this range, we see that the volume increased gradually. So, and it kept being high volume and kept increasing on the next push to the upside. So when the price continued higher, the volume kept increasing again, which showed the interest of buyers, like continuation of the buyers' interest. We hit certain volume, the price tries again, and then started going down on the pullback. Now, what is very important is we have this spike of the volume, and then this is where the volume profile steps in for me, because how do I know when to enter the market? Do I expect the price to reverse? Do I expect the price to go back and continue the upwards movement. It's going to be determined how the next candle after the spike is going to close compared to the volume of the candle with a big volume inside of it. So we have a very big volume spike. I find the candle which this volume spike belongs to. And what I want to see is how the next candles will be reacting towards the value area, so majority of the volume of this candle's volume. Because the previous times what we talked about that, okay, the volume indicator shows us and indicates that something happened, and then the volume profile indicates what exactly happened and where. So, okay, something happened, I look at the candle, I place my volume profile to determine my value area. So value area high, value area low, and point of control of this candle. And then I wait for the market reaction. So I see that the price starts reacting of the value area low, and I even might take a short. And by the next candle, well, I should be basically moving my stop loss to break even already at that time, because it's quite a big, it's like 65 ticks. But what is afterwards happening is that the price goes above this volume. It gets close above the volume profile, the dynamic level, the point of control of the week. It gets close above the value area high and point of control of this candle. It's accepting continuously the higher prices, because if I see the volume indicator, and this is Asian session, so it wasn't a lot of volume for S&P. But even on this period of time, we see that the volume was steadily growing, and it was steady throughout the price increase. So when the price was growing higher, we still had a steady volume. We didn't have like a drop in the volume, so we didn't have the decline in interest towards the asset. So when the price closed above this value area high, I can take a trade from the point of control of this candle for the continuation in the in the direction of the rejection of this volume candle. So the same thing would be, for example, this is a range, so it's also
Anastasiia,
yeah.
Sorry to interrupt you. Can you please take a look at my screen just for a moment?
Yeah.
I'm sharing it only because you're explaining the same area which I'm also explaining in a video, which I'm done recording today. So look at the coincidence. You just explained the same thing, and I'm using the range as a magnet, and this is a trade and stuff.
It's crazy.
The same area on gold. So that's why I'm looking at. This is on the 5 minute.
Yeah, it's the same thing.
Yeah.
Well, it works. It just works. For me, it's the best system to trade.
Yeah, in this video, I'm just trying to save some ICD traders who just use fair value gaps. So the mission is to just make the habit to use order flow and stuff. So I use the same example. That's what I want to share. I keep going.
Wow, I love it. I love the chart. I'm looking forward to see this video actually.
Yeah.
I love by how you made the chart already. The whole explanation is like clear already from here. I love this.
Yeah. Thank you.
It's amazing. Yeah, so basically, it's the same. So we had a comeback. Actually, this is a combination of what I'm explaining and what Tradeify was explaining in his video, which you guys are gonna see as well. Is that here we analyze their combination of the volume and the volume profile, and then this is the price coming back to the range as a magnet and hitting it as a magnet, and then reversing from here as well. Yeah. So you actually have the combination of two different trading methods, different ways of analyzing the market. Is the volume profile of the range, where we have the value area of the range being here. So the price is hitting the value area of the range and reversing. On the other hand, afterwards, so your first entry for a buy could be here, and then the price breaking through the point of control in the value area of the high volume candle, comes back, tests it, and then it's a second entry for a buy. So fairly honest, you have a combination of two different methods and an amazing trade idea where you could even enter with twice. Yeah. And maximize your winning trade 2 times just from basically the volume of one candle and then the volume accumulation. Yeah. Great minds think alike, exactly. Exactly this. So it would be pretty much it from me today. The only things that I want to show also is, for example, if we have the volume spike, where the candle closes approximately like within the big volume area. So here we have point of control actually here, but let's try to find some other example.
And guys, whatever she's explaining using the time-based volume, I'm backtesting it. I actually mark the candle value high, low, and the point of control, use it as the, the supply demand zone. I'm actually working on it. What she's explaining right now in the chat, just to make my higher time frame view accurate.
Yeah, it's a high time frame is actually really perfect because it's pretty much you place the volume profile over the big spike of the volume, and you're gonna find where the volume was the biggest during the spike, which is the same principle. Just instead of using the whole movement, you use one candle.
Yeah, and there is no video on YouTube on this. Just search anything, you will never find someone using the volume profile of spike volume candle. And that's something really new to me as well. So I'm with you guys, just gonna backtest it on the chat and let's make it work for our model. That's what we can do.
Well, good thing is it's coming on the YouTube big from me.
Yeah, so I'm excited. I'm gonna watch it. That's kind of a new way of like strategy, or you can say a new way to have a bias using the high volume candles. Yeah, and using them as supply and resistance.
Yeah, this video is coming actually. I'm just recording it today.
Oh. So I think we had a great day today. I think everyone is recording some stuff. It's really spicy, for the channel. You're gonna love it.
Yeah, you guys gonna love it. But one thing I was trying to show is that I don't use this volume spike. So the combination of volume and volume profile when the market is an accumulation. So when it's in the range, as you can see here, we do have the volume spike, but this volume spike was within the range. And again, it would, in this case, work out because the price would come back again to the value area and would reject, and you would be able to even take a buy here. But in most circumstances, it is not going to work out. The majority of the volume will be somewhere in the middle of the range. And you're going to get stuck in and out of the profit most likely. And the trade is not going to work out. So in any case, when the market is in accumulation, it's better to not trade based on the volume spikes. It's when the market is moving or getting out of the range, it's your confirmation of the market acceptance or rejection to see if it's manipulation or the trend continuation or ignition. So that's this.
So in the meanwhile, Anastasiia, I think when you go deeper dive in this thing, but let's tell chat to spam order flow in chat for the giveaway.
Let's go. Guys, if you want giveaway, and we have 2 giveaways today because you did amazing. We have more than 50 likes on the channel. Type order flow in the chat to win the account.
Yeah. Keep it spamming, right? Only one time, and yeah, you can continue your explanation. I'll get my walk.
Yeah, while you guys are type order flow in the chat if you want a chance to win the account. And let's try to find a couple of more examples. So here, another. So for example, we had the dive below the low, right? We had another one. And then we have more volume coming. We have a huge spike of the volume. So 120,000 contracts within 15 minutes. So if I place my volume profile over this one candle, it will show me that the price closes on the point of control. So price closes within the point of control. I do need to wait to see if the price is going to go below or above it. So again, if the price closes within the range or at the point of control of the candle, just do not rush in the order and go one time frame lower. I'm going to do it now because most likely the platform is going to just hang and we're going to lose the connection. But you go one time frame and 2 time frames lower, and you wait to see if the price is closing above or below the point of control in the value area of this volume candle. So we have this big volume candle. This is 15-minute time frame. I would go on 5 or even 3-minute time frame and wait if the body of the next candle closes above the value area high of this volume candle, I would immediately enter a long trade for the continuation to the upside. So that's this kind of things that I use every single day, to be fairly honest. I can't, since I started using volume profile and order flow, I can't imagine my trading without it. It's just impossible.
I mean, before
like for
that,
example here. Yeah.
I mean, like I said to everyone, that whatever you are explaining today is very important, because to actually even understand the market cycle with the volume profile, it took me 2 years to actually got to know that the market is actually going like a magnet towards the range. Like when I use volume profile, I realized, okay, now I have actual data and definition why that was working. But before, in the Forex market, I used to target the value areas and the range. I actually realized it. And now I feel stupid that, okay, people are already using it. I was just using it without the volume profile. Now it makes more sense.
Yeah. That's true. For me, when I found this out, I was like, "What? This is just so obvious. This is cheat shit." Like,
You actually have
call
to
it a holy grail feeling. Huh?
Yeah, exactly.
Yeah.
You have to use it every single time to trust it. Like, okay, it's working.
Yeah, exactly. So, for example, here we had another, and I'm using not only the volume for instance, just to make it even simpler for myself. I use what is called the cluster search, which filters out the clusters with a high volume within this specific asset in this time frame. So it just highlights it even more for me, and just approximately where the majority of the volume was within this candle. So it, like, the whole purpose of all the indicators that I'm using for the volume, and if I load my actual template, is going to be 15 of them, or like 10, 12, I don't know. So the whole purpose of me using so many is just visualizing the same thing from different perspectives, different angles, to make sure that I do not miss out on important information. That's it. That's the whole idea.
Yeah.
You take all the different things that visualize the volume, you put it on your chart, make sure that it's not too messy, make sure that you can see important information at a certain time. And then your idea and your goal is to know how to act upon it and which side to trade. In this matter. So for here, for example, we had a big volume spike. We place the volume profile. The point of control is on the candle closure. I wait the next candle. Again, I can go on a lower time frame, for example, 5 minutes or 3 minutes. Or in this case, even 15 minutes would help, because even if I would open trade on the opening on the next 15-minute candle after this one, which went above the value area high, I would still be like in a very good profit. In case of placing my stop loss, for example, I open the trade here, my stop loss would go below the value area low of this high volume candle. Why? Because I'm expecting the volume to protect my trade. So I technically don't need to place my stop loss below the low, because there is no point of it. If the price goes below the volume, that's enough. It's gonna reverse. Unless it's a stop hunt, and then I'm going to re-enter the trade. But if it closes below the volume, I don't want to be in the trade anymore. I don't need to wait for the lower low, because I know the price is most likely not going to recover from there. So my stop loss goes below the value area low of this high volume candle. And then take profit can be determined by whatever you use, the point of control of the week, of the months, accumulation zone, a next volume candle that appears. Whatever happens first is your sign to exit the market.
Yeah. And also, we have a fan of you in chat. He's saying, "This is the first time I see this channel. Good explanation. I will try to learn more from you, ma'am. Thank you very much." It's very sweet.
Amazing. Really happy. Thanks a lot. Thank you.
She's actually on fire, no doubt today. She's actually on fire, like just explaining and throwing a lot of shots today. And you guys have to collect it and maybe rewatch this stream to take notes and stuff. It's not enough to watch it once. Go back on the Tradeify channel, rewatch this live stream, and you will thank her every single time you watch or take profit hits.
I'm just so much more energy. I'm actually solving some of the things finally, so I'm excited. I'm gonna be bringing more of this. Okay. We do a giveaway.
Yeah, I'm gonna extract the names. I think we are done with the spam.
I think we are. Amazing, really happy. If you guys have any questions regarding any of the things that I explained, feel free to drop it in the chat while we are collecting the names for the duck race and for the giveaway for you.
Yeah.
Tradeify is doing the bureaucracy work.
Exactly. I think we had an amazing stream on the auto flow today.
Yeah, I think we had a pretty good stream actually. For example, in this case, how would I manage the trade? Let's say I enter the trade for a long, right? And the price gets stuck in a range. First of all, what I would do is I would manage my trade in a way that I would move my stop loss to break even. And because after the range, you have always 50-50 chances where the price is going to go next. Because range, again, as we were talking about today, it's a volume accumulation. So after the accumulation, you need to see where the big market players are going to be pushing the price. So afterwards, we had several volume spikes. One of them was here. And the volume was in the bottom of the candle and in the bottom of the range, which by default is going to indicate for you that most likely the price is still going to have a pullback again to the top of the range, because if majority of the volume would be under this resistance of the range, that would be a problem. That means that the sellers step in, they most likely going to accelerate the price down, and the price is going to break outside of the range for the bearish side. So I would keep the trade here. And then the next time we had a volume spike and lots of contracts, it was on the market closure before the overnight layover. And what is important is that this time it was on the resistance of the range of the upper boundary. And we see that after the market opening, the price was below, going lower. So at least if not closing the trade, I would move my stop loss below the low of the range, because I would know that the price might break outside of this range. If it doesn't pull back again from the same point of control from the previous spike, it's most likely gonna fall further down. So after this, volume on the resistance, at least the stop loss below the lows, below the point of control of the spike, or closing the trade to make sure that you can keep the majority of the profits from this trade. So that's it.
Yeah, I mean, amazing explanation on the trade management as well. So, what do we have here? Many questions. Anastasiia, will you do a video showing how to set up a task? Oh, great question. I want to know the answer too.
You know what? I can. I'm not. I need to ask Tradeify, obviously.
Okay.
We'll because. Because it's I can do the video how to set up the order flow and everything, but yeah, we can set. But I have videos in a free access of this in YouTube on where when I show, and I shared my workspaces to download and everything. So it's in a free access there, but like 100,000 likes will do it.
Exactly. Okay. So yeah. let's shut the duck up first and then start the race.
Let's go.
Okay, let's see who's gonna win, and we are doing 2 giveaways today, so don't leave the stream. And if you win an account, please make sure to write something in chat. Because yesterday we had some people with bad luck. Even if they won, they write nothing, and I had to take away the accounts for myself. So Goroboro, I like your hair, man. Good hair. I'm actually planning to have something like this. It will look good, it's just a good volume profile in the head. Okay, the bee duck.
I like that. I like the bee. I like Roman.
Tradeify Crypto TV. Roman always never surprises. He's doing something new. Oh, Roman is coming again. I think it's Roman. No, It is Rina Malo, G4D. Let me write down her name. Congratulations, Rina. You won 5K two-step account at Tradeify Crypto, where you can trade tokenized stocks, gold, and many things, many crypto coins. Congratulations. Please write something if you are in chat with us. And I'm gonna write down your name so I don't miss out to deliver your account, and make sure to add your email. Okay, where is Anastasiia? Or is it my internet? Am I good? Okay. I have that thing that okay, it's me only. Okay, Reina, congrats. Congrats.
It kicked me out. I'm back. Yeah, it finally did.
Okay, now
it's
we're
really
gonna
struggling.
race again and shuffle the characters. But before, let me ping Reina in my folder so I don't forget. Okay, and I am done. Okay, Reina, don't forget to add your email, okay? We're doing the race again. Let's see who wins. And let's start. I know it's a little bit, no, it's not lagging. All good. All good. Oh, look at this duck with the dragon suit. What's Roman wearing? I have to check. Where is Tradeify Crypto? Mandy, thank you. Welcome back to the stream, man. A long time no see. I think a unicorn duck. First time I have seen a unicorn duck.
No, we saw the unicorn duck. We had the unicorn duck for sure.
Oh.
It was Jonathan, I think, on the stream.
Okay. Look at the witch duck with the move. Crypto 7s. Okay, 18 seconds. And look at some people. Mr. Solo Leveling. I like your name, man. I think you are new to the channel. Make sure to subscribe. I see many new names in this thing. Yumi and Solo Leveling are fighting. I think it's gonna be that the Goroboro, the Goroboro guy. Congrats, you won 5K two-step account with Tradeify Crypto. And write something in the chat if you're with us. Goroboro. I like your name. I like it when I had to try hard to pronounce it. Okay, is he here? My duck is very unlucky. As always, yeah, I mean, you have to consistently watch us. Maybe someday you'll win. Oh, hell yeah, he is. So make sure to add your email to your description and you'll get your account. Congrats, you won an account. I think you already have it. Your email, no, you don't. So please add it. And maybe for just a reminder for yesterday's winner, make sure to add your email. I can't see your email, okay? If you can't add your email, I can't deliver the account. And I think we have come to an end of a fire stream on order flow. And
yeah, I feel like it was a good stream.
Yeah, it was. And also, I think we'll have the stream on the Discord session on Friday. I don't know, but we'll see you guys again next week with the same energy on Monday in this month. Anything, Anastasiia, before we close?
I think everyone can go enjoy the weekend because we do have the bank holiday tomorrow. So go enjoy, recharge. We'll be back on Monday with more live trading, more order flow, more Tradeify, perhaps.
Yeah.
More Polish.
Yeah,
you have time to learn some Polish until then.
Okay.
Okay, guys. Thank you so much. Thank you, Tradeify. Thank you, Roman. See you next week.